Hello and welcome to Duncan Toplis On Air podcast. I'm Caroline Cleary. I'm the Chief Marketing Officer at Duncan Toplis, and I'm joined today by Graeme Hills, our Head of Tax. Hello, Graeme.
Hello, Caroline. Thank you for having me.
You're very welcome. Today we're going to be talking about the recent general election and what the change in Parliament might mean to businesses and individuals from a tax point of view. So let's start with a broad question. What are the key tax policy changes that you're seeing the new UK government might be considering in this early term?
Yeah, so ironically, for a manifesto that was headline change, there's not an awful lot of change to taxation included in there. Indeed, they even talked about keeping the rates of income tax, national insurance and VAT. One of those will be increasing. So there's some surety in that. There were some comments later on in the fiscal summary in the manifesto targeting a few areas that will be changing under the Labour government. So one of these was looking at non-dom taxation and what they call tax loopholes for these individuals. So it's an interesting concept to start off with because they're talking about non-dom status, which is something that the previous government have been starting to move away from. There's a concept of domicile, moving more to residence. The difference very much being where you sort of belong, where you come from, to where you've actually been, which is more what residence is related to. But they've seen this as a loophole that is there that wants to try and close those down. So that's something they're going to target specifically. That's the sort of big headline one when they look at the numbers at the back of their manifesto. And they're also looking at tax avoidance as well. So this is basically giving HMRC more funding to go and close the tax gap to make sure we're actually getting the tax we're already getting. So not raising taxes, not taxing anyone any more than they are currently, but make sure they get the tax that they're already due. So they're investing about 855 million, I think was the figure they're looking to put into that, which again follows the theme from the prior government of investing in HMRC to encourage more of that collection of the taxes already due. A couple of other changes they've looked at. One is looking at private schools, VAT on school fees to raise more funds from that, and business rates on private schools as well. So very targeted taxation of those, which will be a very niche area of increased taxation. And going back to the non-resident point, there's also an increase in stamp duty land tax for non-residents buying property in the UK as well. So that's an extra 1% increase on that. So there are a few areas that they're very focused and they've already put in that fiscal plan where that's going to be spent as well.
But I suppose what you're saying is there may be some direct change, but overall, not the kind of change you would expect from a change.
Not a wholesale change to the rates of income tax, national insurance, anything like that. No, not at the moment.
So if you're sat listening and you're a business owner, what would you be looking to advise them on?
Yeah, at the moment it's very difficult to say because there's this big gulf in what's not being said as well. Obviously, we know that the main rate of corporation tax, as well as the income tax, national insurance and VAT rates not increasing. The government have also pledged that they won't increase the rate of corporation tax. So that's 25% and that won't increase. They haven't said anything about the small companies rate, which is a lower rate, and there's no reason they couldn't close that gap in the future. But again, that might not be quite what they're looking to do. But the main rate, at least, isn't due to increase. So again, that gives you a bit more assurance as a business owner that that's going to stay as it is. They also talked about giving more clarity about how expensing works, which is something that's changed a lot during the years, about whether you can get full deduction for things straight away, whether that's through the capital allowances regime or full expensing or annual investment allowance. There's various methods for doing that. And it is quite a complex area for taxation, so they have pledged that they will improve that and make that more clear for business owners, which has got to be a very positive thing for knowing what your pound's going to get you when you have to pay your tax bill at the end of the year.
Yeah, and as the election results hit, they were looking to the markets and perhaps not seeing a big fluctuation either way in terms of that impact. But what are you expecting the economic impacts of a changing government to be?
The markets are very good at pricing in what they expect to happen. And I think this was an election that was pretty well forecast quite early on. So as long as sort of what happens is expected to happen actually happens, as was the case with the Labour election result, the markets sort of react fairly favourably to that. It gives a lot of clarity overall to what the overall economic impact is going to be. There's not a whole sweeping change that is unexpected. If it's the expected change and sort of things that people have been talking about the whole way through as part of that manifesto, people price that in. So it has a very positive impact on the economy overall because it's what people expect to happen. That ongoing stability is going to be a very positive thing for the economy, you would hope, subject to what they do, any changes that they do come through. But obviously Labour won by such a large majority that they can put the changes through that they want to, and people are going to, at least for a while, be backing them. they have a long-term plan, they can put that into place. So again, it can provide that assurance that businesses will need.
That's it, and business confidence is so key, and we see in our own market with owner managed businesses how important that is. And I guess whoever is in government, some of the changes for businesses very much stay the same. It's labour shortages, it's wage stagnation, it's being able to deliver your business on a day-to-day basis. Do you see any particular changes with those key business challenges?
It's probably too early to tell on a lot of those things. I think some of the uncertain trading conditions is certainly much better off this way. I think having the clarity going forwards, Labour have been very clear to make sure they have a very straightforward and understandable fiscal plan going forwards. They've committed to having one fiscal event a year, so just a one budget, no surprises. They want everything costed out by the Office of Budget Responsibility beforehand. And they've even talked about having a roadmap for these things going forward. So again, you're much more able to plan for those things. So that will help businesses set their strategies in motion going forwards. The impact that will have on labour markets is difficult to tell at the moment. I think one of the biggest impacts we've experienced recently has been the large increase in national living wage, which is obviously great for those people on that salary. They need that to get by. Obviously, been a direct contribution from the cost of living crisis, so it's been absolutely necessary for those families. But if you're a business that employs people on that wage, that's a huge increase, and that's sort of over 10% increase last year, which is experienced. And if that's your business, that's going straight to your bottom line. That's an increased cost you've got. That's nothing you can instantly pass on to your customers necessarily. That is an increased cost you've straight away got. Labour have had very similar pledges to increase that national living wage going forwards, and that's very much been part of their manifesto as well. So again, you can expect more of that going forwards as well. So it's possibly not something that's going to reverse out immediately unless they can get the inflation under control and really solve that cost of living crisis.
And then moving from businesses slightly to sort of look at wealth in a little bit more detail. And two of the big headlines running up to the election were around capital gains tax and inheritance tax. And from what you've said earlier, there isn't necessarily a big change coming imminently on those. But for listeners, almost on a basic level, what is capital gains tax? What is inheritance tax? And why are they such hot topics?
Okay, so capital gains tax is very broadly a tax on the capital assets that you sell. So it's not a tax on income, your earnings, the things you receive as you go along and earn that income. It's items that you capitalise, things that you sell on. So your house, it might be your business or shares. It's the assets that you have that you sell and make a gain on. There's a separate rate of tax on those, which is currently a lot lower than the income tax rates because it's not an income, it's a capital event, it's a one-off. And therefore it's deemed to be at a lower rate of tax was applicable. Inheritance tax is a tax largely payable when you die. There are certain lifetime events, but generally speaking, it's on your estate when you pass away and pass that on to whoever you wish to. Over a certain threshold, there's a tax that's payable on that. It's a very divisive tax because some people see that as being taxed twice. You pay your income tax or your capital gains on getting that into your estate in the first place, and then you pay it again when you die as an extra tax before it goes to somebody else. So it can be very divisive in that way. As to whether it's going to change or not, I think this is where the manifesto was sort of shouting volumes by what it didn't say. They talked very much about no increases in income tax, national insurance, VAT. There was nothing about capital gains tax or inheritance tax. Capital gains tax, we have rumours pretty much every budget, have done for several years, that it may go up and it hasn't done. Being a bit of a cynic as I am, often I think this is a way of drumming up more business because people try and accelerate their capital events sometimes before the next budget dates come through to make sure they can crystallise those nice low rates of 20% capital gains tax, which then helps line the Treasury coffers without having any tax changes whatsoever. So it has a great effect for the government without actually making a wholesale change in there. There does seem to be more lean towards that increasing. I think the Labour government may be more inclined to do that. It has been rumoured for so long it almost wouldn't be a surprise. So it's a way of generating some more income in the meantime. But it's certainly something that a lot of people are looking at very closely at the moment. They are looking at those crystallising capital events now before there is a budget in place and making sure that the current rates are very unlikely to go down. They're very generous at 10 or 20% for most of those capital gains tax rates. So if they're going to change at all, they're probably only going to go up. So a lot of people, if they are having capital events or assets that they want to realise in the near future, they are looking to expedite that and do that as soon as they can rather than later. Inheritance tax is always a very difficult one. Generally speaking, there are reliefs for inheritance tax. So you have a certain amount, £1 million is the headline rate that's given for a family before they pay any inheritance tax at all. There's also a number of reliefs for businesses as well. If you want to pass on the family business to the children, there are reliefs to make that happen. Some of those are perhaps not as well received as others, I think it's probably fair to say. Some of them are there for a very specific reason that might not be there anymore. Obviously, any taxation is partly political. It's to encourage certain behaviours and encourage certain investments. And sometimes those reasons don't exist anymore. So the fundamental idea of passing the family business on can be very attractive, and I think it would be a very difficult thing to get rid of. So I'd be very surprised if we did any wholesale changes to those reliefs. But some of the nuances in there that allow other reliefs for people might well be tweaked and changed in the background.
And I suppose from what you've said is some of it's quite unknown. We're in a world where we're still digesting the manifesto almost to try and predict where we are.
Mm-hmm.
The King's speech is about to land, and we already know that we're looking at an autumn statement and all that is in the run up to that.
Yeah.
But if we were to put Graeme Hills in charge of number 11 Downing Street, the Chancellor of the Exchequer, what would you be looking to introduce or influence as we approach that first fiscal event?
Probably very unexciting, Caroline. I don't think you'd do an awful lot. And I think that's because there's nothing in there that's fundamentally broken, that really shouts out as being this needs a wholesale change. I think if you're a Labour government, you might have to disagree, because it's very difficult to come in and say, yes, we agree with the party and what they did before. But there's nothing in there that's screaming out as being fundamentally broken in the current taxation system. And what they really need is that clarity. I think that's the biggest point of this. And so I think that my first priority, if I were to be in number 11, would be that roadmap that Labour have talked about. I think actually setting out what we plan to do and when is going to be very important. So you've got that clarity. I think you know what's coming. They've talked about no surprises. They've talked about one event a year and having this roadmap in place. If you can see very much where you're going to be, that really helps the whole of the business and the economy work around that and actually build towards that. If they know there's going to be a change to capital gains tax that's coming in next April, okay, well, I can plan between now and then to do something about it. And it's fairer that way. Where it grates people is when it's something that happens overnight, and tomorrow it's all very different and it's all very up in the air and surprising. That's when markets react, when businesses react, when it scuppers deals and changes things wholesale. That's when there's the bigger problems that come out of taxation changes. But if it's all signposted, people know where it's coming from and they have that clarity in what they can expect, people can plan around it, and that's only good for business.
And I guess on that point with planning is moving out of Downing Street and back into Duncan and Toplis, perhaps you could just touch on those areas where when you are in business and when you are looking to provide in the right way for your family, you can start to be concerned about any sort of change. What opportunity is there for them to access tax advice, and what difference does tax advice make in that situation?
Tax is necessarily complex. I think it started out very simple, but every time you make a very simple system, it has holes in it, and there's elements that are unfair. And over the years, it's become very much an evolution, and it's been very much targeted at achieving certain things and encouraging certain behaviours amongst the populace. So to make it truly fair, you have to have clauses, you have to have sub-clauses, and tax legislation is immense nowadays. I remember when I was doing my CTA training, one of the trainers came and he bought me a book, and it was a sort of couple of inches thick, and he put it on the table and said that was the tax legislation when I started training in, I can't remember, it was 1967 or something, I think he told me. And then he brought out this big stack of tax legislation, which was almost a couple of feet high. And so this is what you've currently got to learn in your CTA. So it's extremely complicated, and that's why advice is so crucial, because there are so many clauses, so many reliefs you didn't know you were entitled to, and everyone's entitled to structure their tax affairs in the most tax efficient way. But it's so necessarily complex, you can't possibly know it all. So you do need that level of professional advice. And what it allows you to do as a taxpayer really is focus on what's important to you. Inheritance tax is a prime example of this. If you're talking to someone about inheritance tax review, looking at their estate and how they can structure that in the most tax efficient way, you don't start with how much tax are we going to save. You focus on what you want to achieve with your wealth, what you actually want to do with it. And the tax rules is then for your advisor to sort out in the background. But it's really making sure you've got that plan for what you want to achieve in life and making sure that the tax falls in with that. So the clearer plan you can make, and that's why I talk about the fiscal plans for the budget and the government going forwards, is if you know full well what tax rules are going to be, you know what your plans are going to be and where you want to be in 2, 5, 20 years of your life, you can work with your advisor to build that plan and structure that accordingly. So the more you can think about what you want to achieve and tell your advisors and let them do all the hard work, the better for you.
And I suppose that's kind of how you've ended up in this chair, is working with clients, advising them, and now you are head of tax at Duncan Toplis. What is it about the tax team that's really made you want to be a leader in that space? Because there's lots of joy in working really closely with clients, and naturally, as you go into different types of roles, it's very much about leadership and how you take that service line forward. So what is it that's still exciting you about tax?
Thankfully, all of it, Caroline. I'm some of a tax geek. I do find the technical side very, very exciting. And as I say, a couple of feet of very thin papered legislation is an awful lot to get your head around. But there's some fantastic people in the team that know their areas really, really well. There's someone better than me at every area of tax within Duncan Toplis, which is fantastic. I don't think I know a lot about all those areas, and I can still get involved in all those things. But someone who knows a lot more about it, and the fact that it's quite an interesting challenge in itself, the tax side. But when you're making real tangible differences to people's lives, and you know the difference that's making because you're having those conversations, and you can frame it in a don't worry about the legislation standpoint. It's what do you want to do? You're making a real difference to what makes them tick and what makes them excited. So it makes a huge difference to our clients. The team are really enthused. They're all really excited by what they do. They're impassioned because they believe in it. They know it's achieving these things for people, and they're a great bunch of people to be working with. So really couldn't be better.
And I think that's a great kind of closing statement, if you like, is if listeners, businesses, individuals are having concerns or thoughts about what a new government might bring or any change might bring, is there are people here in your team that can help them think about what are your goals and how can we best support you in achieving that. So no doubt we will be popping back in with you as we approach the autumn statement. But thank you so much for sharing everything with us today.
My pleasure. Thank you for having me.